Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, September 29th, 2013. The market's not doing that much here, but I'm kind of excited about this video because I've got a lot of cool stuff to share. I think there is a good amount of opportunity here in the market as we've been coming in a little bit, maybe a buying opportunity in the S&P coming up. Definitely divergence with NASDAQ being stronger. Tech stocks are still rocking, so lots of things to talk about in this video. Let's start with the S&P like we always do. You can see here I've put a Fibonacci retracement on the chart just of the low to high move, and the key area really is going to be this. This is what's coming up soon. Notice that the selling here has been pretty orderly, and we're coming into this 1680 area in the cash. This is exactly a 50% fib retracement of the low to high move, and notice that you have a confluence of moving averages here that are coming right up underneath where we are. And as I was saying a second ago, the selling has been really orderly. There's been really no type of panic selling, and at the same time as the divergence of the NASDAQ and NASDAQ Composite, the NASDAQ 100 and the NASDAQ Composite is just showing so much relative strength. I mean, you see that it's holding up much closer to the top of its trend line here. There hasn't been any type of this type of move as you've seen in the S&P, where you've moved down closer to the 50 MA. Notice how much distance there still is here between the 20 MA and price, right? You're not seeing that in the S&P. It's so much closer. So I think that this divergence feels like it wants to somehow resolve to the upside. Certainly the NDX and the comp are setting up to possibly break higher, and I think it's bullish that at the same time the S&P, we'll look at the spider this time, has already been coming down to the middle of the range, as has the Dow. So there's been a little bit of a rest in the Dow. If we look at what's going on in the market profile, you'll see this divergence really, really clearly. It's amazing. This is the profile of the ES here on the daily. These are the daily session, the RTH sessions between 9:30 and 4:15 on the ES. And notice how value is really, I mean, it's a little bit lower, but you can clearly see that value is just overlapping the down. So you have this downward movement here, right? But at the same time, what is value doing? Value is equal here, a little bit of a gap down here, completely overlapping here, and then here a little bit down. This is an overnight session, so don't pay attention to that one. But here, just a little bit down, and still relatively close to here. And now also we know that we have this area here where a lot of value was. That's right in the 1680 area, and this is where we're looking for the S&P to support. And as I was saying, if you look at the NASDAQ, now look at this. This is the profile of the futures of the NASDAQ 100. I mean, does this look like value is establishing anywhere lower? Let's think of value as these yellow areas, correct? The yellow areas are value. This is where 70% of the volume went off. Do you see any situation here where you have, for instance, this is a value area, and then another value area, and then another one, and another one? You see how there's breaks in between them. You don't see that at all. You constantly just see them overlapping. This one's overlapping this one. This one is completely overlapping this one. Again, these two are absolutely equal. They're completely overlapping. So that's the problem here. What I think is that there's really no downward pressure here in the NASDAQ 100 at all. And that's what seems to be holding up the market. And I think this divergence could actually lead us a little bit higher, as obviously from a fundamental perspective, we have the no taper. Personally, I don't think anything will happen until the next Fed president comes in. That would mean it would be a 2014 pullback in the quantitative easing. This, to me, coupled with a seasonal bias upside of the fall-winter months, I don't think there's a heck of a lot to hang your hat on here for the bears. Obviously, anything can turn on a dime given news. Maybe the market gets spooked by the budget thing and this whole shutdown talk as we come into the fall, but really, I mean, that's what markets are good at, right? They climb this wall of worry. Also, excess to the downside on the NASDAQ profile, which is interesting. Remember, excess could mean that it's an end to an up auction. However, we generally want to see that excess at a low. But the NASDAQ, I mean, it even has these excesses at the lows. Look at here. That's an excess low. That's an excess low. And here's an excess low. And notice that it's the whole thing put together is really a swing low, right? Where you have a swing low is where the middle low is the lower low. So these are all things that, while they're not all out bullish, only for a reason that the market is so overextended and it's been up for a while, I'm just trying to point out that there's really nothing bearish out there. It just doesn't seem like there's anything for sellers to really hang their hat on at this point. So I'm still thinking a little bit to the upside. All right, that being said, I think there's still opportunity in tech stocks. Apple definitely comes to mind. I've been pretty active in Apple as usual, especially from a day trading perspective. I mean, it continues to be a good trade, and I like the action over the last 5 sessions here. This is interesting to me. This was the gap on news, and you can see here since then it's sold off very quietly, and it still seems to be holding that 20-period moving average just underneath it. So my thought process is that this contraction in volatility, and it obviously is because you see bigger candle, big candle, and then smaller candles at the end. I like the little dojis here. Leads to obviously this action, and target would be right into here at the prior high, and then I would say maybe to like a measured move a little bit to like 540ish or so. So Apple, I think, has the possibility of getting a little bit higher. I also like this area as a pretty strong support, so I've been watching that as well. Google is very interesting here. If you recall from last week, I had a ratio spread on, which didn't happen. Google was showing relative weakness to the market. You can see it actually sold off a bit more, certainly, than the NASDAQ, right? If you compare Google to QQQ, GOOG certainly looks a lot more bearish, and hence last week I was working with a ratio spread where I was buying 860 puts on the weeklies and selling 2 times the 850 puts, and I paid a 10-cent debit for this. This trade ended up going out worthless on Friday as the downside move past the 870 area didn't materialize in GOOG. I think GOOG could be a similar situation this week to Apple, and I'm just going to show you, put a Fibonacci on it right here from the low to the high. Notice that GOOG has almost touched down to the 61.8, but not quite. So the 61.8 is at 868. The low of Friday was 871. So that may have been it. A lot of times the touch won't be exact. So I think that GOOG over Friday's high could be interesting, at the very least for some small pop up to the upside. Remember that I very often tend to hedge these types of plays with ratio spreads. I use ratio spreads a lot, not only for speculation to see if the stock will actually go down in there, but also as a hedge. Instead of buying, for instance, the entire put, right? For instance, if you look at the weeklies here, these have 6 days out. The stock is trading at 876, so let's say you would have to buy this 875 put here, which is 630 by 650. So let's say it would cost you about $6.40 to buy it. Remember, you could always buy this put and sell a couple of puts somewhat below it, or maybe go out a little bit further in time and do that. It's probably not going to work so well for OCT with just 1 week here, but if you look out further, look at OCT2, which is 13 days. So if you believe, for instance, that GOOG in the next 2 weeks will not go down below this level at the 850, then, for instance, you could easily go out to these couple weeks and buy that 875 put. And let's see here, 875, right? That would cost you 970, but you could easily sell a couple of the 850s against it, and that would essentially be this trade, right? That's this one here, right? Back ratio. That's 10 875s, sell 2 850s. So I have risk below 850, but I'm covered if I was to buy the stock at 875, you know. And this would cost me $4.50. So obviously I have to make more than that. And then, of course, the trick is what calls could you sell on the call side to pay for that, right? If it's covered, there's a number of different ways that you could play it, right? You can always go right into here and look what's going on the bid and say to yourself, okay, what can I sell here to make this, to neutralize this debit? Maybe I could sell the 890. So now obviously I can make money only up to 890 where I'm capped off, but I've got $15 to the upside. And if I go back to the chart, I'm assuming that the stock's going to hold anywhere in here. I'm also protected on the downside. I don't lose anything. So this is kind of a window into how I look at these heavier price stocks. And obviously It's a little bit capital intensive. I tend to just buy the shares, but there's no reason why this can't be done with deep in the money calls, right? You can obviously go out deeper, say out to here, and you don't want to purchase the stock at 888, so you go into here and look at, where's the high delta here on the calls? Where can I get at least 85, 90 delta on the calls? Um, and let's just look here, 96, 94, right about in here, right? That's 90 delta, so that's November. How about 780 calls and pay 99 instead of 800, right, to control the 100 shares. So there's just different ways to think about it. I like to be creative with options. I like to use them in a number of different ways, both hedging, speculating, short-term, long-term, etc. So these are some things I'm looking at. All right, let's move on to some other trades. Futures. There's a lot. I've been talking about this corn trade forever, and I want you to please read the Ask the Shadow column of this weekend. If you're watching this video from the weekend update, and I know most of you are, there's a follow-up email there from a gentleman named Jody who grew up on a farm in Wisconsin and now lives out here in my neck of the woods in Pennsylvania, and he has some knowledge about the space, and he also likes the support level here in corn. And I'm still looking at the same thing. It's basically in the 425 to 440 area. It's moved up a bit. You can see the trend line here is more closer to about 440-ish. I think basically you have to give it a range. You have to be willing to take some pain. And the trade is really somewhere between 440 and probably the 445 area, I would say, right? Or 425, excuse me. Probably somewhere between the 440 here and maybe down to the 425. But definitely read the email that the gentleman sent to me. I think it's pretty cool. And there's also a link in there to the August 4th weekend update going back, where the initial exchange between he and myself and Jody was there, where he sent in some notes talking about the corn trade. All right, beyond that, I talked last week about short in the Swiss franc. I still like it. I still think that the trend channel here is important on the weekly. And if you switch it out to a daily, you can clearly see what I'm talking about. I've already just put out 2 here. Remember, I like to put out a small number as an alert, so that way it just kind of really, like jars me into the trade, and I'm like, it's not just like set an alert and then it goes off, and you're like, yeah, man, maybe I'll trade it, maybe I won't. It kind of forces your hand. You don't have any choice. So I'm looking for Swiss franc to move up into here and then reverse, as I talked about last week. I think that there's support coming up on the dollar. Maybe the Swissy goes a little bit higher if the dollar tanks, because you can see here the dollar actually still has quite a ways to go down to the horizontal support level. But this is also an area I'm looking at. I will be interested in buying dollar futures here at the 79, knowing this is strong support for a bounce. And that being said, that's where you want to be looking for other things to reverse, right? If the dollar is going to bounce up, then you would expect euro is going to be down from there. So will that area tie in to this in the euro? Will the 79 in the DX tie in with $1.37 in the euro, and then they sell the euro from there? Probably. See how this all kind of ties in, so it makes a lot of sense. So that's it. That's some trade ideas there for you for next week. Kind of wrap your head around what I'm looking at. I'm going to be focusing on Apple. I'm going to be focusing on GOOG. And that's about it. I'm going to be looking at this trend line support in corn. Corn opens up on Sunday night at 8 p.m. If you go back in that Ask the Shadow that I've been talking about, there's a link there to the CME group contract specs, so you can see how that works, per bushel and how many bushels is each contract worth, and all that. You can check it out. And that's it. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.